Julian Karagweshin is a former special advisor, Ministry of Finance in Canada. Great to have you on the show. Good morning.
Thank you for having me back. Good morning.
Fantastic. So we see the central bankers are meeting. The top ones are meeting this week. We also have the U.S. Fed decision coming up this week. What are you expecting?
Well, I'm expecting, given the increased softness in the U.S. economy, in the U.S. outlook, I think more of a negative impact in the short to immediate term from the tariffs and the trade war that was initiated by the Trump administration. I think because of that unexpected softness, or more than expected, I think they're probably going to ease a little more. So I think the easing cycle is going to be here for the rest of this calendar year.
Right, and we see for the U.S. Fed, I believe consensus is 25 basis points cut. Are you expecting any surprises? Maybe 50, or maybe no cut?
I'm expecting actually the baby step of about 25 basis points, and that'll leave them some additional fuel for a further rate cut at their next meeting this fall. I don't expect any surprises this time, but maybe the next meeting in later in the fall.
Right, and we see other top central bankers meeting. I believe the BOE, the Bank of Japan. What are you seeing for those ones?
Oh, I'm sorry, Ladi, could you say that again?
Yeah, other top central bankers, they're also meeting this week. It's not just the U.S. Fed. What are you expecting, for other top economies?
For the smaller G7 countries like Canada, I'm expecting also a rate cut. For the Europeans, if you look at the last IMF World Economic Outlook and recent updates to the outlook by the European Central Bank and others, you've seen a slight increase in activity in Europe and in the outlook. So I think the Europeans are going to hold steady, given that their margins for inflation are much tighter. So I don't think they're going to increase financial, or they're not going to ease conditions anymore. I think they're going to be in a holding pattern. But I think just generally across the West, the risks are tilted to the downside, and I think all central banks in the political West will be ready. If they don't reduce interest rates in this cycle, they'll reduce them later in the fall, given the potential risks out there.
Right, and definitely we've seen gold. Gold has hit levels we've not seen before. We did hear central bankers were buying a lot of gold, so far, and they're still buying, at this point. And we see gold rising. We see the stock market rising at the same time. But it feels like it's telling us a story we can't understand, because normally if you see gold rising, the stock market should be going down. What is this telling us?
Yeah. I mean, I think it's a fantastic question, because I think that's one of the key questions to ask. I think what could be going on is, I think there's the central bankers out there and others are seeing a market, U.S. and global equity markets that are very, very high. Price earnings ratios are in some cases as high as they were before the financial crisis in some cases. And also at the same time, you see all this hedging going on with gold. And after the 1990s, in early 2000s, when central banks were outdoing each other to sell gold, except the United States, except the Federal Reserve, now they're getting back into gold, perhaps as a hedge for an expected decline in the U.S. dollar. We're in this new era. We're in a transition from a U.S. dollar, U.S. economy dominated world into a new world where the global south is becoming much more important, where 75% of the world's population live. And there's a lot more trade between the countries of the global south. And you see currencies like the Chinese renminbi, and the Indian rupee, but particularly the Chinese renminbi, starting to become a global player, starting in the very early phases. And so there's dollar risk out there, and we've seen dollar weakness. And I think central banks purchasing gold provides a bit of a hedge against that.
All right, thank you so much. It was great having your perspective. That was Julian Karagweshin, is a former special advisor, Ministry of Finance in Canada. I know you're trying to catch a train there. Thank you so much for staying on.
Thank you. Thank you.
All right, let's get a check on the other top stories. Right now, see Tesla Inc. That stock surged in positive territory for 2025 after the CEO, Elon Musk, purchased about $1 billion worth of shares, signaling confidence in the electric vehicle maker's long-term prospects despite a turbulent year. According to a regulatory filing that was released, Musk acquired the shares on September 12th through a revocable trust, marking his first open market purchase of Tesla stock since February 2020. And in the UK, we see the unemployment rates remained at a near 4-year high in July. That's according to data released today, while pay growth that remained elevated ahead of the Bank of England's policy meeting. That's later in the week. According to the Office for National Statistics, jobless rate stayed at 4.7% in the 3 months to July. As expected, haven't risen to this level in May. This remains the highest level since July 2021. And Google have announced today that they've opened a new data center near London as part of a sweeping £5 billion, about $6.8 billion investment in the UK aimed at scaling up capacity for its AI-powered services and cloud infrastructure. The move underscores Google's push to meet increasing demand for services like Google Cloud, Search, Maps, and Workspace. And we also see in the U.S. President Donald Trump's nomination. We're seeing the nomination to the Federal Reserve Board of Governors. Economist Stephen Moran was approved by the Senate in a narrow vote on Monday evening. Moran's appointment to the Fed board was approved in a 48-47 vote, with the confirmation now allowing him to participate in the Fed's September 16th and 17th meeting there. Moran was nominated by Trump to fill a seat abruptly vacated by former Fed Governor Adriana Kugler, with his term set to expire in January 2026, when the seat's original term ends. So definitely we'll see if he is as independent as they were trying to find out.